Dana Cornell, CEO of Cornell Capital Holdings. Hey, pleased to have a good friend of mine and a tenured developer that we're partnering on a new offering on, Tyler King from Quiet Capital. Wanted you guys to be able to meet Tyler, hear his story directly, and then let him tell you about the project instead of hearing it just from my words this time. So Tyler, welcome, man. Thanks for joining. And why don't you start by just telling us a little bit about your background, what you've done in the last few years, and then we can jump into this project.
Yes. So, hey, Dana. I started in real estate in probably 2013. I started a development company to where it started off fixing houses and flipping them, and then that turned into new construction, buying big tracts of land, building single-family homes for spec development. So that was a successful venture that I still run today. Slowly winding that down to focus primarily on the private equity side, where we invest in multifamily communities throughout the Southeast. So, to this date, we have acquired probably 2,800 units throughout the Southeast, and we're in 5 states, about to expand to 2 more states in Mississippi and Louisiana, which is the deal you were referencing a bit ago. So we've got probably 100-ish employees, a top tier structured management employee system, anywhere from our COO, CFO down to, the property managers at the property level. So we're very well organized. We have systems and structures into place. And so far it's been a really good venture.
Excellent. I know you do keep things pretty organized. So question for you on the third party management, or is it third party, or do you guys do that in-house?
It's third party. So we have 2 management companies because we kind of outgrew our first one, but they're still good at what they do. However, we switched over recently to a new property management company, and they have been just night and day. So impressed with the work that they've done. So actually on this, I know you're going to reference this deal coming up, but we brought that management company in a couple months ago, even though we haven't closed on the deal yet. And one of the upsides to this portfolio that we're buying is it was mismanaged. It wasn't run properly. They hadn't had management on site in several months. So the seller allowed us to go ahead and bring our management company in, and they have increased the property value dramatically in just a matter of 2 months, from upping occupancy, upping collections, getting out the bad tenants, online presence from a marketing standpoint. It's just been night and day, and we're really pleased with the work that they've made.
Excellent. So tell me, let's dig into the project now. How many units? What are the locations? Expected returns? And you touched on a little bit about why I guess you think this project is unique, and you're going to hit the return numbers that you're projecting. But let's dig into all that.
Yeah, so it's about 417 units, I think 420, something like that, spread across 4 properties. 1 is in Mississippi, 3 are in Louisiana. 3 of the 4 are ready to go. They're stabilized, they're in good shape. The only problem was that they were, slightly mismanaged. One of the properties in Louisiana, it needs, some heavy lifting as far as new roofs. We have to correct some aluminum wiring, electrical panels, stuff like that, like heavy CapEx stuff that we've budgeted for. But the good thing about that is I like taking on those type of properties because you don't put permanent debt on there initially. So we're putting bank financing on there to where we're going to make the improvements over 2-3 years, and then hopefully increase the value enough to pull some capital back out when we go to refinance into permanent debt. But as far as the portfolio overall, it's just a good buy as far as a cash flow basis. So we're anticipating the first year to spit off around 7% cash on cash. But what's weighing that down is all the money we're having to bring up front to that one property I just referenced. So, in 2 to 3 years, when we refi that property and it's cash flowing and running steadily, those numbers will look a lot better. But between that and then putting the proper management in place, which we've already done, and executing our systems and management procedures, we're hoping to have this thing spit off 10% double-digit cash on cash by year 2. So I'm always conservative in the pro formas that I use. I make sure to, under promise and over deliver. So I feel pretty good about these numbers. And yeah, we anticipate hitting those by year 2.
Okay, excellent. So what's a typical, I guess, total deal structure and timeline? How long do you expect limited partner equity to be in? Any idea?
Well, I thought you were talking about timeline on closing this deal because it's been a long time, but it's a 10-year hold is what we're performing. So we buy assets for cash flow. We get offers every day on properties that we have that are just stupid, and it makes sense to take the money, but then where do you place that money? It's so hard to find opportunities these days that make sense. So this one does make sense from a cash flow basis. And so we're buying for cash flow, and we anticipate holding this thing from 7 to 10 years. Our ears are always open for offers, but with the financing that we're putting on it, it's a 10-year term, and there's prepayment penalties, obviously. So
Okay.
if a sweet offer came, in years 6, 7, 8, and the prepayment wasn't a factor in that, of course, we're gonna entertain it. But I would anticipate a 10-year hold.
Yeah, that's perfect. We always like to be realistic in what expectations we're setting. So this is really for investors that can stick with a 10-year hold on a property that's going to spit cash flow like this. So that'll fit a lot of my investors. Okay, great. And you did touch on that. So when, to give these people enough time to kind of make a good decision. And of course, I'll field all questions that come in, and I'm sure you're happy to get on a call with people if needed. To go deeper. When are you expecting that ideally you'll have all the money in so we can close this property for you?
We're looking sometime like 20th, 21st of September to have all the funds in, but I would prefer verbal commitments by, first week of September, just to get everything organized, because you know how it is, wiring money to entities and all that getting organized. So
yeah.
But we're anticipating closing as early as the first week of October.
Okay.
So due to the financing, I told you, one was a bank deal. The other 3 properties are agency debt. They won't align probably the same day simultaneously, but they're going to be around the same period of time.
Sure.
So as early as October, no later than end of October.
Okay. No, that's fair. Anything else while I've got you about the project? Any risks that could throw this off in your opinion?
The only risk would be, overspending on capital expenditures. That's always going to affect cash flow if you get in there and there's unknowns once you start really digging into it. But I feel like I've put a pretty conservative number on the capital expenditure budget to where if there are any unforeseen issues, we have budgeted for that. And we're funding the reserve accounts up front as well, which helps out tremendously. So the last thing we ever want to do, and we've never done, is have a capital call where you go back to investors and say, hey, we need more money.
Yeah.
We just don't do that. So that would be the only unfortunate issue, other than COVID, something crazy happening like it did last year.
Yeah.
But these are landlord friendly states. The eviction moratoriums are lifted. So we feel really confident in these investments.
Good. Well, I know our team has done our due diligence, and I'm more than comfortable, doing this deal with you guys, and I've been looking forward to a project with you for a while. So for those that are watching, we'll put out our soft reserve system. Please reserve your spot. As you know, that certainly doesn't absolutely lock you in, but it is a firm verbal commitment to participate. So after that, we'll follow up directly to answer any questions and make sure that you're a good fit for the project and it's a good fit for you. So Tyler, thanks for jumping on the call, man.
Thanks, DC. Yeah, just reach out or have your investors reach out with any questions. I'm happy to help.
Will do. Talk soon.
Talk to you later. See you, bud.
A soft reserve technically is not a formal commitment to commit to this project, but it is for people who have serious interest, because we will reserve your spot, holding off other people that do want to invest in this project. Most of ours fill pretty quickly, within a week or two. So please fill this out. Reach out to us with any other questions. Know that it is not a formal commitment, but it is for people of serious interest, just to make sure everybody understands what soft reserve actually means to Cornell Capital Holdings. Thanks.